as always, we'll end with reminding investors to please read these, the common behavior heuristics that prevent investors from achieving their strategic investment objectives. I think it's probably good practice as an investor, if you're going to be an active investor in general, to probably read these at least once a month to remind ourselves that, hey, we are human beings. We are wired to invest wrong. We are wired to invest poorly based on everything I've ever read about behavior heuristics. This game that we call investing, this discipline requires a lot of discipline, and it requires a lot of overcoming our emotions to do this well. Hopefully, I'm not too monotone and boring in our research, but again, we rather have a boring, systematic, institutional research process because that produces better outcomes in our portfolio. If our goal is to become very popular because I'm on every finance podcast and on CNBC, then I'm not so sure that's probably going to generate the best outcomes in your portfolio, because in order to become the most popular person, you typically have to, kind of succumb to selling people this kind of stuff. We do the opposite. We actually create solutions in our research, in our systematic research process, to overcome these biases. Whereas a lot of investors, folks who sit in the seat that I sit in, tend to try to sell you on they try to weaponize these biases against you to get your clicks, to get your fees, to get you to trade on their platform, to get you to do something that you probably shouldn't be doing if your goal is to maximize upside capture in bull markets and minimize downside capture in bear markets. And so hopefully we're doing our best job at that.